So with that, let's start with just a super quick round of introductions. We do have a couple of people, Marshall as well as Idaham, which will be joining us in a moment as well. But let us get the introductions kicked off. Ken, will you do the honor of kicking us off first?
Yeah. Hello everyone, my name is Ken. I'm the country manager of Stashaway. So if you haven't heard about us, I want to know what rock you live under so that we can also advertise there under the rock. So
it's called Planet Earth, man, the rock.
Yeah, well, there are people who haven't heard of us before. When I see them, I'm like, wow, look at this unicorn, so pristine. Let me sell you Stashaway, right? So, but yeah, before working with Stashaway, I was at Khazanah for a few years, and then I was at Fave for 5 years as an investment banker. So overall, about 12 years of experience in the financial service industry. Actually, I noticed someone in the crowd. I think she's gone now, but she's a podcaster, and I actually just recorded like a whole bunch of, yeah, there she is. So Lingya, who's in the crowd, is behind the This Is Why podcast, and I didn't know, but she basically, I did do the whole podcast with her, but she released the whole version, so my life story is on there, and it's very boring, so maybe skip to the parts where I talk about money. But you don't need to know my life story, but a lot of it is out there already, so I feel at this point it's better to know people like Suyin and Yiling.
All right, for those who want to stalk Ken and know his personal history, yeah, do check out that podcast as well. Yiling, introduce yourself.
Hi everyone, thank you for joining tonight's session. So my name is Yiling, and I'm actually kind of like a fresh grad. I graduated from uni back in December 2019 and started off in Stashaway as a client engagement executive. And within a year, I just assumed the role of a PR lead as well, and now I'm a senior client engagement and PR lead. Yeah, I guess that's all. Suyin?
Hi everyone, I'm Suyin. I guess I've been investing since I was 22, or maybe not that. I was learning about investing when I was 22. I officially started when I was 24, now I'm 29, and I make YouTube videos sometimes on money and investing so that more people can join in on the conversation. Because I realized that it wasn't normal for people to talk about money, and I just want to give more access to more people, I guess. And yeah, I was an international school teacher before, and now I'm working in sales.
All right, thanks for the intro, Suyin. Yeah, I hope you're enjoying your yakitori there. That was a little bit noisy in the background, but yeah, I think if you speak up, we can hear you all right. Giant, do a quick intro of yourself.
Sure. Thanks, Steve. Good evening, everyone. Hi, Suyin, Ken, and Yiling. My name is Idam. I am a licensed financial planner and co-founder of Vantage Advisory, a licensed financial planning and advisory firm. I have over 18 years of experience in the financial services industry. I started out in investments, unit trust, wealth management, before moving on to risk management as well as estate planning and distribution. And I think I upgraded my license to become a licensed financial planner about 5 years ago. Yeah, so yeah, that's all for me.
All right, and yours truly. So I'm the founder of MyPF, My Personal Finances, which is a leading personal finance education site. So last year we had over 1 million visitors and the top 1,000 sites in Malaysia. And with that, let's jump straight into our first question of the evening. Yeah. Do you use Stashaway significantly for your personal investing, and why yes or why not? I'm probably guessing Ken and Yiling does, but let's hear it from the horse's mouth as well.
Yeah, so I even before I started with Stashaway, when I was thinking about joining them, I did check out the app, and I thought, wow, this is something that is pretty cool, gives me access to overseas investments. I would use it regardless, right? They gave me the motivation to actually join the company, and since then I have been using it. Very, very happy. I mean, super biased, obviously, but I'm into my 6 figures now. So significant, not significant, it's all relative, as you all know, but I'm invested through the full cycle, so to speak, since day one. And when we launched that time, we had 5 people in the office, and we had a bit of a race to see who could like transfer money in first. So till today, I actually don't know whether I was actually first in the door, but I have been invested since day one. I am dawdling a bit because I'm trying to see my performance. So since the start, my performance is 29% for my 20% risk portfolio, and for my high risk portfolio, I am at 34%. So that's not so bad. We'll talk about dollar cost averaging and all that soon, but yeah, pretty happy with my return so far. It's all pretty transparent, and I'm the king of promo codes, right? So at least I know the best way to invest on Stashaway for cheap.
Alrighty, and we'll be giving out some promo codes. The speakers can be plugging certain stuff as well. So yeah, tune in to the end of that. Well, let's hear other than from Stashaway, Suyin. Yeah, do you use Stashaway significantly? I know, in your videos you all quite often talk about Stashaway. Sometimes I've heard some people refer to you as, that Malaysian female YouTuber who talks about Stashaway. But is it a significant part of your investment journey, and why yes or no?
Thanks, Steve. I actually wanted to add on what Ken was saying. He actually showed me his portfolio before, so he's not lying. He is using it as his main investment, and I find that really confidence building. So that's why I actually have a very special place for Stashaway in my heart, because the team actually uses it for themselves. And for me, I guess slowly I am building my Stashaway into a good allocation. And when you see from my videos, it started off very, very small, and I think I was putting up 250 every single month. And then after gaining more confidence, I'm putting more at 1,000. So slowly but surely it's building.
Are you close to 6 figures as well, like Ken?
No, definitely not close.
Alright, how about you, Yiling? Did you also fall in love with Stashaway before you started working at Stashaway?
Oh yeah, definitely. I actually started investing in Stashaway before I even got my job at Stashaway, actually. So back then I was just a fresh grad. Well, not really a fresh grad, but I was about to end uni. And a lot of investment platforms, they actually don't allow anyone under 21 years old to invest, and other sort of like high interest saving accounts as well were very tier based. Definitely I do not have like 6 figures like Ken. But being a fresh grad or being someone that's quite young, not knowing how to invest, Stashaway was definitely a very good platform to start off. And definitely I have put in some money into Stashaway, and I use it quite often as well. And you all may know to DCA your funds. So yeah, just keep DCAing. That's the trick.
Alright, DCA is short for dollar cost averaging. And
I've got a question. Not a question. I've got a story as well. So in the early days when we were launching Stashaway, one of the C-suite members, I won't say who, because this involves money, but one of the co-founders actually came to Malaysia to help us with the launch, right? And when we go into meetings, he would actually say, "Oh, let me open this demo account and show you what we can do," right? And in this quote unquote demo account, it was like a few $1 million. And then he showed like, okay, you can create like the different portfolios, and here's the low risk one, here's the high risk one, this is for my kids' education, this is for my almost cash, this is for my super risky one. And then it's like, oh, okay, demo, okay, shut up. So I asked him like, oh, is this real or is this the demo? And then he said, This is real, but I tell people as a demo. So just so you know, co-founders also put millions of their money where their mouth is. So 6 figures is not nothing. I'm looking forward to the 7 figures with Stashaway as well.
That's totally awesome. Actually, we'll not speculate on who this individual is from the C-suite office of Stashaway. But yeah, I totally agree actually of putting your money where your mouth is, and I think that's totally really important to do as well. Giant, your thoughts?
Yeah, for me, Stashaway is my first introduction into robo-advisory, as well as the concept and basically into ETFs actually, investing into overseas ETFs. So for me, it was something where I wanted to experience the difference between what robo-advisors can do and what human fund managers using active management can do. So I'm pleasantly surprised, I must say. So yeah, that's where I am right now with my robo advisors.
Right, pleasantly surprised is always good. Personally, I've always been, a huge fan of, using technology, fintech, even before the fintech word existed. I still remember when, Fund Supermarket we then, entered actually, and I was actually like, the first 100 people to sign up. And similarly for Stashaway, I was also on their pre-launch notification list as well. So yeah, it's really interesting to see how Stashaway has been growing as well. Yiling, do you have like a cheat sheet of Stashaway? What are the most common questions people ask? How much to start investing? What are the fees? How long does it take to withdraw? Can you just give us that super quick rundown?
Okay, so let's start off with the withdrawal timeline. Typically, it takes about 3 to 5 business days to get your funds sold off and then get back your money all the way from the US, remitted back to your bank account through IBG. So typically, that's about 3 to 5 business days. In regards to minimum deposit, definitely we do not have any minimum. But typically, what we would recommend is if you want to try out Stashaway, deposit at least like $100, $200 just to try it out. Something that's not too significant if you're still very wary or still very new to the space. But typically, we do not have any minimum. And also another good thing about Stashaway is we do not have any lockup periods, not like some FDs or high interest savings accounts that you see out there that lock your funds up, literally holding it hostage. So yeah.
And how about the fees, Yiling? The range of fees?
Okay. The fees range from 0.2% to 0.8% per annum, depending on a fee structure. So if you would like to know more about the fees, actually, you can actually write into our support WhatsApp or also just email us because we have a really brilliant client experience team that's handling all the queries that come in.
All right, awesome. And talking about how about any other robo advisories? Have you tried out any other robo advisories? How does it compare to Stashaway?
I have purely out of spite and purely out of competitor analysis, and I have a very special place in my heart for my competitors. So I will refrain from saying too bad things, right? But all in all, I'm forced to say that choice is a good thing. Customers should be able to choose what they want. But as the country manager of Stashaway, I cannot say good things about them. But I will say that they are decent and they're not crooks. So that's the bare minimum that I will say. Unless you tubate me some more, and then maybe I will say good things lah. But I don't know what you want me to say, man. Stephen, you say lah. Are there any other good financial planners out there? Very difficult, right? it's impossible.
Of course
man.
there are. Of course.
Yeah. By the way, I have $1 million, Stephen. Are there any good financial planners out there that I should put my money with other than you? Right? Cannot, right? It's like, well, it's difficult lah. But I will say that they're all doing a decent job, and some of them are better than us in certain respects. Like some of them have FPX or they receive money a bit faster. But performance-wise, I will say that it really depends on when you cut the figures. If you cut it during a particular calendar year, if you cut it during particular months, right? So at the end, while I won't give a comprehensive rundown, I will just say that different people value different things, right? So if it's down to straight up performance, if it's down to the communication, if it's down to the interface, all that weightage of decision making should really be decided by you, the customer, right? And people like Suyin and people like Peter, people the different bloggers out there as well have created different comparison content to put them up together, including MyPF. So I think all in all, it's yours to choose, but I'm quite secure in saying that we are definitely up there.
Right, confidence definitely counts for something. And the question that you asked me, Ken, if someone would ask, who are your competitors? Would you recommend another financial planner? I actually would, to be honest, and I have actually done so. Naming 3 to 4 other financial planners with that confidence that I'm so confident giving it to you that I do believe that my site would actually be the best choice. So if there's a saying, right, if you let it go and you come back, and that it's totally yours as well. I also agree with Ken's comments that really is about, if you're talking about just pure performance, granted, Stashaway was for the first to market, and the rest have all come in at different points in times as well. So just yesterday, actually, one of the heads, the CEO of actually one of your competitors of Stashaway actually called me up because he knew that we were actually publishing an article comparing between all the various robo-advisories, so that should be out tomorrow. Check it out on mypf.my, and he just wanted to make sure that we weren't overly focusing on the performance side actually, because performance, although important, is not the only factor, and it really also depends as well, the timeline horizon for investing, etc. But with that, it would be good to share, maybe 1 or 2 more. Suyin or Giant, do you invest in other robo-advisory, and how does it compare?
Okay, I think I'll take this one. I think most people know that I'm solely using Stashaway for this type of investment. I don't know, I think the rest are pretty good as well. It's just that they didn't catch my eye in terms of what assets they were holding. But I am quite curious about Scythe over on the other side, our neighbor island. I think if the offering is different enough, then only I would actually explore.
Scythe over in Singapore does look interesting. From what I hear, I don't think they have plans to come to Malaysia. Anyway, for the time being. Giant, do you use any other robo-advisories before we move to the next segment?
And similar to Ken, my thoughts are just to see how do they compare, as well as it's although it's still small, the choices that we have here in Malaysia, I can see that each robo-advisor is trying to differentiate itself in terms of the assets that they hold, in terms of their strategy. So although performance, like you mentioned, is a strong factor in choosing one robo-advisor over another, I do feel like having the different type of exposure in the assets that they hold should also be a strong decision when you are deciding over where to invest. But I think for a lot of people, they might not have such a well-diversified investment portfolio. Perhaps they're okay, like, I'm just going to stick with one. But like for me, I'm very well-diversified. I hold a lot of different asset class. So I do invest in a few others just for diversification purposes.
Right, and likewise myself, but it is true, and with a lot of my clients as well, they are indeed facing app fatigue, actually, having way too many apps, and it gets pretty crazy with that. So let's just reset the room a little bit. Welcome to everyone who's just joined us, and thanks for everyone who's been with us from the start. Today we are talking about how to stash away with Stashaway. Again, feel free to raise your hands if you have a question, you have a comment, and we'll bring you up on stage as well. So with that, let's move to our second question for the evening. What's your favorite Stashaway tip that most investors don't know of? Maybe Yiling, you want to start us off? What's your secret Stashaway investment tip?
I don't think it's much of a secret, but it's easier to say than to actually practice and hold on. So my tip is actually do not panic. If you see the markets go down, you see your portfolios in the reds, don't worry about it because in my mind, no government ever on earth is ever gonna let their markets crash forever, right? So if you panic and you sell and you get emotional about your investments, that's when you actually will actualize any sort of losses. So always just hold on, Just give it some time, let it do its own thing. Ken, anything to add?
Yeah, so I would say that we have littered the market with a lot of promo codes. So if you haven't started, just go around and look for a good promo to get started. In fact, in my bio, there's already one, so you can always go and get a few months off from our fees. But other than that, I like the direct debit function. I think that people who use it to put money into their account is a set and forget kind of tool. And then if you already have a lot of cash in your Stashaway Simple, you can also use Stashaway Simple itself to slowly dollar cost average into your core portfolios. So I think that's a really good way because obviously we don't want people to just do dollar cost average, but also while your cash sits in Simple, you can accrue a little bit more interest. And other than that, I won't say there's anything else that we are secretly keeping up our sleeves, but other features that people may not know that because they don't spend so much time within the app itself is actually we have Stashaway Academy, which allows you to learn on demand. There's a few clips there, only 3 to 5 minutes each, and you can learn about a whole bunch of stuff, including retirement planning, including investment basics, all that fun stuff. And then if you are really, really nitty-gritty, there's also the transactions tab where you click and you can find out, I got this amount of dividends, or Stashaway bought this ETF for me while it rebalanced. So all your deposits, your withdrawals, your buys and your sells are all recorded there. So some people like to do it, look at it at month end to see what their position is and know exactly how much ETFs they have. So I wouldn't say that there is anything secret, but if you click into all those little nooks and crannies, you might find things that spark joy.
All right, I like that spark joy tip. Thanks, Ken Yiling. Definitely not insider trading, but yeah, some insider tips or best practices. Let's hear from the other side of the fence as well. Suyin, you obviously spend a lot of time with Stashaway. Any tips or secrets that you found or helpful practices?
Yeah, sure. I agree. I love the direct debit, like when you just send and you don't need to do anything more. That function is godsend. But I think on top of that, if you're the kind of person who is super itchy when it comes to looking at your investments, and then that's when you get the urge to do something prematurely, a great tip is to actually delete the app. It will save you a lot of heartache, I guess. Another one I find helpful is I was on Facebook Stashaway group, which I highly recommend getting on. It's quite interesting. They even set like watch lists for whatever ETFs are in their portfolio, and then when they see that it's like a whole sea of red, that's when they actually buy the dip. And yeah, I guess like that's a good way to go.
All right, deleting the Stashaway app, that's something I never thought of. But yeah, maybe that's an interesting feature actually, to kind of forcibly lock down your app for a certain period of time. Yeah, so maybe Stashaway can consider that. Finding a community of like-minded people. I'm in the Stashaway Facebook group as well. Yeah, it's a pretty awesome community there. Giant, any Stashaway tips that most investors don't know of?
I didn't realize that if you delete it, the investments will still be there.
Your account is still with us. I think what Suyin meant is that you don't delete the account, you just delete your app, but obviously you can still access it on the web.
Yeah, but it makes sense, but I've always thought that, If I delete, then the money is gone. Okay. Anyway, for me, I think it's very similar to I'm not sure, was it Yiling, where the fire and forget method, I think, is very, very effective. So it's not something like where you try to open and look at how is it doing every day. In fact, I think perhaps maybe once a month or maybe every quarter you just do a review. But the regular saving, I think it's a must. It's just that this one I need to get some thoughts from Ken. Is there a difference putting in like on a weekly basis versus a monthly basis? Is there any like research over whether one is better than the other?
Not specifically. Obviously, you're just spreading out your bets even more, right? So, I think at some point the marginal returns decreases. Like if you do it every day, that's a bit extreme. So I would say, one week, 1 month doesn't make that much of a difference. I remember doing some research where if you put every month, it would be very different. If you had just put it at the beginning of the year and just let it ride, and also if you didn't put in while the market was down, like we did some research last year. So we released this report called Stashaway Insights not so long ago that showed that people who actually withdrew in the bad times crystallized like a negative 5% loss, whereas people who actually just continue depositing, they would make a plus 10% performance. So that 15% spread is there. Whether it's weekly or monthly, I don't really know which one is better. But this is something I do actually practice as well, which is a pre-programmed response, because when markets fall a lot, maybe something more than 3%, people get very antsy, right? People get very anxious. So my pre-programmed response is just to put in money when markets are down big. So in March and April last year, when markets fell 5% or fell 10%, I would just put in money, and I will say that it scratched the itch. Don't say that all the fear goes away, but you should continue doing like that. And obviously, if you hold on and the market recovers, then you'll be laughing. So things like that behaviorally you can kind of tweak yourself and ultimately get the best out of a down market. I remember last year someone on CNBC saying, everyone is buying toilet paper, the rich are buying stocks. So it's paper of a different kind, right? But in the end, smart money and normal money, that's the real difference.
Right, definitely all types of paper that we're investing in. As to Adam's question, I think it really depends on how volatile the combination of asset classes are. Stashaway, it shouldn't be overly volatile, so it shouldn't make too much of a difference. But if it's something highly volatile like crypto, a shorter duration of dollar cost averaging, daily, weekly, etc., might make a little bit of a difference. Just in case you're like super sway, with the dates that you're actually putting in those funds. Another feature of Stashaway that I really like is actually the goal-based investing, where besides the general portfolios, there's also those investments you can select like for education or other purposes, and there's a time-dated or year-dated, where time-dated investing, where the allocation actually changes over a period of time as well. Just wanted to tap in on, Ken, if you know about that. So let's say I've set up an education portfolio. It's an 18-year-old goal for my newborn. When does the allocation changes start to kick in actually to basically like de-risk the portfolio, I would presume?
So it's only set up only at the beginning initially. You can actually de-risk it yourself at any time, say at 3 or 5 year intervals as you near the date where you actually need the money for your kids' education. But we've actually heard that feedback before, and we actually did think and talk about maybe one day having a fund where you can just set and forget, and every year it kind of ticks down a notch so that you you don't have to do it yourself, right? But now what you can do is actually click on your portfolio and adjust the risk down or up. Definitely down if you are approaching retirement or approaching the goal. And you can change it at no cost, no switching costs or anything like that. So in terms of super autopilot to that extent where it de-risks for you every few years, not there yet, but we have gotten that feedback before. We are thinking about it. But yeah, I think switching manually yourself or calling us to instruct you on how to do it is definitely possible.
All right, awesome. Thanks for the clarification. Yeah, definitely looking forward to that feature, and maybe in a little bit as well, future question we're talking about some of our other ideas or suggestions for Stashaway. But before that, again, hey, welcome everyone. If you've just joined our room here for the My Personal Finances Club meeting for this evening, we're on every Thursday. And this evening, we're talking about how to Stashaway with Ken and Yiling from Stashaway, Idaham from Vantage Advisory, Suyin from Suyin Invest, and yours truly from MyPF. So again, feel free to raise your hands if you have a question or comment. And with that, let's head right into our third question for the evening. What is your opinion of Stashaway's asset allocation strategy? And maybe we'll just start with Suyin, because I know that Suyin has actually also holds the 36% Stashaway Risk Index SRI, which is the highest risk index available on Stashaway's portfolio. And why is that, Suyin?
Okay. Funny story. When I first signed up with Stashaway, I wanted higher equity allocation portfolio. And then I think they re-optimized. I cannot remember. I feel like they re-optimized twice. And I really didn't want any gold in my portfolio. And then after the most recent re-optimization, there's 20% weightage of gold. But I mean, it is what it is. I've ranted about it before, but
for the benefit of us, before we go into the rest, why do you dislike that 20% allocation into gold that's on Stashaway? Well, basically all the portfolio holders 20% holding right now.
Yeah, I mean, I guess I'm just not a gold investor. Like, I see the perks or the benefits of it, but at 20%, I feel it's quite high, especially for the highest risk index. But again, like when we invest with a platform, you're abdicating a lot of your control, which is the whole point of using the platform anyway. And that's it.
Sure. Any other thoughts on the rest of Stashaway's asset allocation strategy? Are you happy with the rest of it besides the gold portion?
Yeah, I'm pretty happy with the new entrants post optimization of they made way for emerging market, China. There's a REIT in the 36 risk index now as well. So not a move that I would personally have done, but very happy with the results, and I'm still continuing to be a happy Stashaway user.
All right, good to know. Giant, what's your opinion of Stashaway's asset allocation strategy?
I like it. I think it's quite well diversified. I'm only aware of the May re-optimization. I'm not sure whether there's any more after that. I feel similar to Suyin with regards to gold, but at the end of the day, for me, diversification is very important. And sometimes we may not like certain assets, but due to being diversified, it does help your portfolio in some way. So I try to think of it from that point of view rather than more like, I don't like this or I don't like that. So that's
Which portfolio are you holding? Which Stashaway risk index?
the highest one.
Also at 36%. All right. Another question as well, Giant. How about your financial planning clients? Do your financial planning clients invest using Stashaway as well?
Well, I'll say that many financial planning clients are exploring robo-advisory, and one of the concerns is Sharia compliant. So there are other options out there, and for some clients that might push them where they want to invest. Although, like I mentioned, the asset allocation is different, can be different. Concerns on Sharia compliant usually would win out lah. I would say that's where I see it. Where the decision will be made between one over the other. Yeah.
All right, Sharia compliance definitely is an important question actually that a lot of investors in Malaysia would have. Yiling, any thoughts on that?
For me personally, like I said earlier, I just graduated uni and I've not had much experience in investing. So I honestly think that the algorithm or the asset allocation is actually great because truly I just leave it and just close my app, don't ever check it unless I have to, unless if I need to just show someone like how it works or whatever. Other than that, I think it's fine for me. But as we said, like gold is quite high in the 36% asset allocation. The 36% portfolio. But I think having gold as well is not that bad because gold is still considered like a safe haven. In case everything is really down, gold could be going up 7 times like this. Yeah.
Yeah, I do manage the gold portion as well because it's fixed basically by adjusting my other allocations if my various other investments in other vehicles other than Stashaway. So to keep the gold at a level that I'm comfortable with. Before we move to Ken, another question for Yiling really. So I believe that one of the things that Stashaway talks about is that to highlight the difference actually between re-optimization and rebalancing. Yiling, you wanna talk to us a little bit about that, re-optimization versus rebalancing. Is it the same? Is it different? And how so?
Okay, so let's start with re-optimizing. So re-optimization essentially is us switching out certain securities that's within your portfolio out for maybe a different security. So when we re-optimized last year back in May, we actually moved out quite a fair bit from US exposure because there was quite a lot of events happening in the US, and during uncertain times we didn't need more uncertainty, I believe. So we actually switched out, and we also increased the gold asset allocation. So essentially you can think of re-optimization as just switching one out for another and then rebalancing. In that case it would also be if you think of your portfolio, it's actually made of several different securities, right? And each portfolio has a specific set of weightage for each security. So in this case, what I can tell you is for the 96% portfolio, there's 20% in gold, and then there's also 20% in China tech. So it's KWEB. So if say your asset allocation somehow grows, like KWEB really performs really well, and it goes to like 30%, right? Your risk for your portfolio is really considered unbalanced. So what happens then is our investment strategy, ERA, so the economic regime as allocation, it will actually rebalance it in terms of just spreading it out, make sure the weightages are balanced again. So that's the difference.
All right, thanks for the rundown, Yiling. Ken, you kind of hinted a little bit at some of your various portfolios. If you want to share with us about that, and also if you want to answer Giant's question or comment on Sharia compliance.
Yes, overall, I just want to say that when it comes to investing, it's really down to risk, right? And risk is not so transparent most of the time, which is why we have labeled all our portfolios according to risk level. And while it's more interesting and it is easier to absorb a concept when it's explained in terms of themes, like, okay, this is a China fund, or this is an equity Malaysia fund, or this is a ESG fund or a robotics fund or a passive ETF.
I'm not actually that big actually on thematic themes, yeah. But yeah,
it is not the be all and all, right? But that's how the industry has been going about marketing its products, right? So ultimately, what we're trying to do, which explains why you might like or not like something, is all that it comes down to risk, right? And while people have preferences, it basically comes down to us adjusting the risk so that you can get the maximum expected return. And while we don't want to say that we know more than you about investing, at the end of the day, if you want to leave your money with the experts, you let the experts do their job, right? You don't pop into the pilot's cockpit and say, hey, I think we should take a left here at the Rocky Mountains, right? So we know what we're doing, and I think what people need to understand is how we actually invest their money. And we basically try and optimize for where we are in the economic cycle. So as we go through these different ups and downs, we will re-optimize, and even better, we'll let you know why we optimized. But at the end of the day, if you really feel like you have a strong conviction towards picking your own ETFs and building your own portfolio, you can do that as well, right? Just know that you can't necessarily do it on Stashaway, but what you can do, the next best thing, is you can go through all the portfolios that we have, you can see what ETFs are in each portfolio, and you can then choose the one which you say that, okay, I have the biggest preference for, let's say, China Tech, I will pick the one with the most allocation towards China Tech. But at the end of the day, those preferences shouldn't really be tied to what you prefer. It should be tied to what risk you really want to take, right? So it's the same with us, right? As an asset manager, a lot of people are never happy, right? If we make their money, it's like, oh, I heard somewhere else made more money. If we lose their money, they're like, why did you lose our money, right? So we have to take the long view and say that if we want to build people's wealth for the long term, these are the risk levels that we're willing to take on your behalf, and this is the current asset allocation. So that is why we don't respond to people when they, kids in a supermarket, they will want shiny stuff, right? Or I want DeFi, I want coins that I haven't heard before, I want Doge only when Tesla's talking about it. I didn't know there were 6 rubber gloves, I knew there were 3 rubber gloves, but now I want them all. I want GameStop even though I haven't been to the US. I want AMC even though I haven't been to the US. I want Bitcoin now, but maybe not tomorrow. All of this sounds very, very kind of funny to you guys, but like we hear this every day, right? So NFTs, funny coins here and there. So at the end of the day, preference is one thing, but at the end of the day, if you want to outsource your money to an expert, you find out how the expert manages your money and then let us do our job. Otherwise, be more self-directed and kind of go on your way and don't blame anyone if you lose money, right? So we're trying to do things in your best interest, and sometimes you have to give up a little bit of control to get a bit more gains, right? So that's what I want to say about it. It's not really about preferences as such. It's more about your risk return.
I was definitely chuckling along, while Ken, you were talking about that, because I've seen even some so-called financial content creators that come out and say, oh, robo-advisors is 20% last year, 15-20%, I made like what 100-200%, so robo-advisors is just for kiddies, really. But I really would like what you said, Ken, because asset allocation is one of the key things that financial plans look like, and I look at pretty detailed as well in my own portfolio. So just a little bit of how I actually looked at Stashaway and how I look at it for some of my clients who are on Stashaway as well, is that we kind of look at, okay, what's the composition of Stashaway, because there are various ETFs that it's invested in, and also depending on the Stashaway risk index profile that you're taking. So for some, basically allocation, okay, there's basically only 1% cash, so we just ignore that. But for the rest, how much into fixed income, how much into equities, how much into properties, which is basically only the 36% profile, that's risk exposure, how much into alternative investments, which for right now, for Stashaway is only in gold. But with that, we get an idea and we try to match that actually, both the investor risk profile and kind of the returns that they are looking at. So for myself, I actually landed on 22% actually as the ideal statutory risk index for myself actually, and so happens for quite a few of my clients. Also happens to that. Of course, all this that we're sharing should not be taken as financial advice. It's all just for education and entertainment purposes. With that said, another thing that Ken, you talked about was how Stashaway tries to focus on optimizing based on the different economic cycles. And as I was looking at all the other robo-advisories in Malaysia, none of them are actually doing that. So why are the three other? Well, let me rephrase that more Stashaway specifically. Why is Stashaway focusing on the economic regime, and while others are not? What does Stashaway see that the others aren't seeing?
I think when Freddie, our CIO, tried to build a robo-advisor along with Michele, our CEO, he actually said, why don't we do it better, and instead of just having a static portfolio, why don't we actually value add by helping them change their strategic asset allocation, i.e. long-term asset allocation from time to time. So I think that's really the advent of ERA, or our investment framework, and it is really, really differentiated. Not a lot of robo-advisors have it. They might have a fuzzy black box that has a white paper that I can't really understand. And actually, not a lot of.
Hey, if you can't understand, what's the hope for the rest of us, right?
Well, maybe I just don't want to understand, right? But really, it's like, if you read terms like machine learning and AI, but you don't really show us the implementation, then what's the point? I even would wager that there are some robo-advisors. There are a lot of robo-advisors in the US that don't have this investment framework. So our thinking is that we don't want just to be fully passive and let the markets go up and go down and your portfolios along with it. We want to try and somehow smoothen a bit of that volatility by switching people in and out on a strategic basis. The fact that you guys can't really pinpoint how many reoptimizations there is really because we only do it very, very rarely. So far in our history, we've only done it 3 times. We've been around for 4 years, and the last time was in May last year, so you guys didn't miss a thing, right? Idam, Suyin, you're both right. So it's not something that we wake out of bed and your lower back hurts and you're like, yeah, today I feel like selling gold and going long oil, right? We don't do that, right? So it's not really a question that you asked, Steve, but I really want people to understand this concept of alignment of interest or conflict of interest. If you guys trade stocks, why do you think that the broker is the one who constantly asks you to buy and sell, right? Short-term trading strategies, buy more stocks more often, isn't that great, right? It's because they make money from you going in and out. They don't say to you, invest for the long term, because they only make money when you go in and you sell 20 years later, then you go out, right? Then they don't make money. So I think that's very dangerous, right? And you have to decide for yourself. The reason why I'm saying this is because you need to open your eyes and look at every single financial product you have, including Stashaway, and ask yourself, is there an alignment of interest? Is there a conflict of interest, right? Plenty of minefields out there, right? You have insurance-linked products, which has a lot of conflict of interest. You have brokers and even things like eToro and things like that create a lot of conflict of interest. So know your game, pick the best platform to exercise and express your game and your plan, and then just stick to it, right? There's no such thing as loyalty or no, I like Stashaway, I like Ken, whatever, right? No, that's not the point. The point is, does this really serve your investment goals? And then just use it to the max and don't be too nostalgic or touchy-feely about it. It's just a tool, right? Don't worry about the rest.
Zayan, any thoughts on your conflict of interest?
I think I'm of the same mind with Ken actually, with regards to anything. Whenever you're looking at financial products, you always have to bear in mind what's in it for the other person, and whether is it a win-win scenario or it's more of a win-lose scenario. So I think a lot of investors or I would say Malaysians out there, they tend to look at what they can get, but they don't look at some of these things like fees, charges, um, why certain products are sold a certain way and things like that. So I think that's important, and education and literacy, something like what we're doing right now, is very, very important in this day and age when there's a lot of different type of products and services out there.
Right, definitely. There's a lot of confusion, even personally, small things like, there are some not robo-advisories which kind of pretend to be robo-advisories. So even that to me is, kind of like, a very fuzzy gray line actually. With that though, let's head on into our second last question for the evening. So for those who have just come in, we're talking about Stashaway this evening. Again, feel free to raise your hands, questions. We'll also be having a Q&A right at the end of the session as well. And let's move into, if there's one thing that you could change about Stashaway, what would that be? And we'll get Suyin to get us started off here. I don't think she's going to be ranting to us about gold as being part of portfolio, but if you could replace gold with something else, or maybe you have some other suggestions, for Stashaway, Suyin.
Okay, I don't really have an asset suggestion. I mean, I leave it up to y'all. But I would really, I don't know if this is asking for too much, but I would really like to see the average unit cost of my ETFs in my portfolio. It's just something that I'm very curious about as an investor. I mean, I could do it, I guess, but it's just a lot of calculations to go through and the statements to go through. But I don't know, I'm just very curious where my average unit cost for each ETF is at right now.
Marshall, the planet isn't with us this evening, but yeah, the nerd in me, would be pretty interested in that. Ken, any thoughts or Suyin's suggestion?
First time I'm hearing about this actually, but I'm glad you're tracking it that closely. Yeah, if you look at the monthly statements, you can see how much you bought and at what price, right? So I think that's one way. I don't think it's something that will be really developing. Because if we were to develop, it would be something really, really big, right? And something that is a feature that really benefits a lot of people. So we won't go into such nitty-gritty, to be honest, right? I do think from where I stand, what we can improve is actually, I personally also would like deposits to be a little bit faster. I understand all the challenges, and FPX and all these payment methods are not free. So as a firm, we need to think about it carefully. We need to weigh the costs as well.
E-wallets?
Yeah, a bit gimmicky for me, to be honest, right? So why not bank account? Same, right? Like it's not like people put a lot of their money on e-wallets, to be honest. Let's be frank. And also, it wouldn't necessarily be faster. So I think that ultimately we just stick to the big pot, which is your bank account, and something like FPX I think would speed it up by a day, so that helps, right? But other than that, I can't really think of what else to improve. All I can say is that if in the future there will be more choice, and actually maybe more features that will help people stay on their path towards their goals, right? Just indication of whether you are contributing enough or not, right? Whether you are on track or not. Things like that I think will help tools rather than like always product. I think eventually also we want to be in some of the pension schemes, and we're talking to the authorities and all that, but it takes time, right? The authorities need to change the laws for us, which takes time. So everyone wants the best of everything yesterday, and I think that with a bit of patience it'll come. So inshallah, it will come. So don't worry about it so much.
All right, that's totally awesome to hear. And yeah, I think from the community, definitely faster deposits and withdrawals is one of the very much requested features. Another one as well is that there are some investors who feel that even the 36% statutory risk index is not high risk enough for them. What about for all those people? I'm just representing the community. It's not my personal viewpoint because I'm not even at the 36. But for all those people who actually want an even higher statutory risk index, any response to that?
Those people were nowhere to be found in the depths of March last year, right? So I think it's like in the good times, everyone wants the thing that's doing very well. In the bad times, people want the thing that doesn't lose money, right? So I think ultimately it does come down to risk and return. The more risk you take, it's not a straight line. It's not a exponentially straight up line as well. It's a curved line with a plateau, and even with excessive risk, it can go down. The expected return can go down. So at a certain point, we just got to say it's just not worth the incremental risk for that incremental return. So 36% is plenty. Actually, since our launch, every year 36% portfolio has done 17%. In last year did 20, year before did 33. So year before I think should be single digits. So it's a good fund, right? And I would just say just ride it out. It doesn't. If we set the boundary at 30, people would ask us why not more. If we set the boundary at 36, people would say why not 46, right? So you got to stop somewhere because the marginal returns is just not the risk, not worth the risk.
Right. On behalf of the community, thanks, Ken, for that answer. Before we move to Ken Sing, Yiling, is there something that's on your wish list for Stashaway?
For me personally, I would say maybe we could create an in-app how to navigate Stashaway app, I guess. Because we do have quite a fair bit of people asking every now and then on how do we navigate, how do we find certain things. So I think that would be helpful.
Does it make your day-to-day work easier, Yiling?
Probably the client services team, but for me it's okay. But I think it's just a very nice feature to have. But as what Ken said, when we roll out something, we definitely want it to be big. And yeah, for now, I guess just not yet, but maybe one day.
All right, definitely looking forward to that. Ken Sing, you have a question or comment?
Good evening, Steve, Ken, and the rest. I actually have just one comment because I heard about Ken mentioning about when I transfer fund in, there is still a delay. But I have been using JomPay to do my remitting of funds to Stashaway. And I noticed that in the last 3 times when I topped up my account, because I do it on a manual basis, if I do my JomPay transaction before 11 o'clock in the morning, I get the email from Stashaway that the funds have been received by about 3:30, 4 o'clock. And when I check the next day, the investment has actually been put is in process. So
yeah, definitely, because the JomPay mechanism uses the gyro windows. So the gyro windows have 2 windows in the day. It's just that some people, when they transfer in the evening, they count it as 1 day already, right? So we can only receive it the next morning. So if you actually transfer in the morning, we can actually collect it during the same day, and we can invest it the very next day, right? So it's actually down to when exactly you transfer, right? It has to catch that train, so to speak, catch the window while it's open. So we can't dictate when people transfer money. Sometimes we see a lot of people logging in at work and managing their personal finance from work and things like that, right? But sometimes they miss the 11 o'clock cutoff window.
Working hours are the peak hours for people browsing MyPF as well. So.
There you go. So
I guess what would help is that if you do come up with some guidelines on what are the cutoff times, then people will be aware. Because one of the sad things I've seen is that people are not aware that if I do my investment today, I expect to see everything reflected ASAP. even when you invest in a traditional unit trust, you don't see the updates within the next 1 or 2 business days.
Yeah, you
So
yeah,
this may actually help.
it's a good tip. I think people know that there is this option and like there's certain windows, in the
and the cut off times for them to do it.
Yeah, sometimes it's a bit too much detail. All these banking operations is like it's very nitty gritty and all that. But yeah, I think if actually we introduce something like FPX, we would just get the money instantly any time of day, right? So we are working towards that. It's just that it's not here quite yet. But yeah. Thanks, Jensen. How have you been?
And one of the things I really like about Stashaway is that what you now say, all of you have got skin in the game. Because I see some others where even the big bosses are not even invested in their own products.
Ooh. All right. Awesome tip there, Ken Sing. Yeah, definitely. Simple to implement. Hope Stashaway does do that. Yeah, totally awesome. And if they do that, yeah, I would totally love if Stashaway gives you some free months of no fees investing for your awesome tip there. All right, thanks so much again, Ken Sing. And with that, let's move into our real final question for this evening. So, guys, what do you think is the future? As we whip out our crystal ball, what do you think is in the future of digital wealth managers, and especially for Stashaway? Maybe Giant, you start us off.
I'm speaking from my point of view as a licensed financial planner, and I sort of answered this question during your session yesterday, Ken, with Regina, which is for licensed financial planners, when we manage our clients' financial circumstances, we are looking at the in terms of holistic and a comprehensive manner. So sometimes for fund management or investing, we are not 100% doing like you mentioned, advising on thematic things. We're more focused on risk profile, risk index kind of approach. I'm not sure about other licensed financial planners, but for World Vantage Advisory, that's how we approach it. So I think it's very important to have these kind of tools in our hands, so that we can focus on other areas of our clients' financial, like cash flow, debt management, risk management, because there's a lot of other things that we need to be looking at, not just investing. So for us, I think digital wealth management is or managed portfolio. The concept of managed portfolio is something that I think could be would be the future in Malaysia, because when you're talking about the getting people up to a level where they are very knowledgeable in terms of understanding and investing to different assets and knowing the difference and the correlations between different asset classes, I don't know when when that will be. So having something like simple where they can say, okay, I'm a conservative investor, I want to invest into something conservative, I choose this risk profile. I'm an aggressive investor, I want to invest something aggressive, I choose this risk profile. It's just that while you were answering the question just now with regards to the risk index and all that, I just realized that it's an interesting marketing problem as well. Like how do you explain the difference between 36% versus some of the lower risk index? How do you get that message across to people? And again, like you mentioned, is it just like about numbers? Like people want to see 100% risk index and just to say, oh, I'm fully invested in something that is fully 100% risky. So so yeah, but I think something like this managed portfolio concept is and robo advisors is, I think, is here to stay. It's just that I'm interested to looking at the different iterations and the different ways of the implementation, whether Stashaway, how you will evolve, or if there are other people coming in and bringing in their own flavor, their own style of doing things.
Totally, and definitely fintech is continuing to change the game, and with a liberalization of investing, would say, I actually look forward to the day where all these various asset classes or even platforms where they're investing. Hey, crypto is just another boring asset class they invest in. Similar to how you use robo advisories. It's just just like breathing or normal part of life itself. Suyin, though, what are your thoughts on the future of digital wealth managers and Stashaway as well?
I guess I'm actually looking forward to the day where investing in a digital wealth asset manager is gonna be mainstream. I think we are getting there. I don't know. I feel that this is such a easy way to invest, and it's such a great stepping stone or introductory point to investing, because truth be told, not everybody wants to do all the research, or nor everybody has the time. So platforms like Stashaway are super helpful, and if everybody is an investor or like a good investor through these platforms, it'll be very interesting to see what changes in society.
I totally agree with that. So I've been investing for over 2 decades. Starting out quite early on as a stone turner, or which is basically a stock picker. But yeah, as I get older as well, I tend to value my time a little bit more. In fact, I no longer stock pick even on the Bursa markets. I only do direct stocks in the States, and the rest of that is all actually through various funds, robo advisories, portfolios, etc. Discretionary approach. Yiling, what do you think is in the future of digital wealth managers and Stashaway? Do you have different insights? Being an employee of Stashaway as well.
For me, I think definitely there's still plenty of room to grow as a digital wealth manager, as well as the entire robo advisory space. Definitely there's room to grow. So hopefully in the future we'll get a larger market share as well as wallet share. I think Ken would be pretty happy if he did get the larger share in the market as well. Yeah, but I definitely think robo advisory is here to stay. I don't think it's gonna go anywhere else, because you can see with everything coming up being so technologically advanced, right? It's really just gonna keep going forward.
All right. Thanks for sharing your insight there, Yiling. Happy boy, Ken. We've saved the best for last. Where do you think is the future?
I think that Yiling has a very bright future with Stashaway. I think she can succeed me one day. I think that's definitely very, very possible.
Wow.
More bonus, I foresee, more stock options, or good things, right? So, on my end, I mean, I can't tell the future, but I can tell, from the Stashaway point of view, like where we're looking to invest in terms of our growth. I think there will definitely be more products, and there'll be more products that give people more access. I think that's what people really want. They want access. There might be the new asset classes, there might be new ETFs, we'll see, right? I don't hold your breath. You'll be very blue in the face if you do that, because we're focusing now on launching in different countries. We're actually going live in Hong Kong and Thailand within the next 3 to 6 months. So Stashaway Malaysia, I would say that it'd be nice to get into those pension schemes like I talked about earlier. And also different features that help people stick to their long-term goals, right? Things that assess your financial position in more granularity, as opposed to, say, just investments. I think those things will be very helpful. And,
do you want to expand a little bit on that granularity, just briefly?
I will leave it vague for now, just because it's still in the works, right? But if you pay attention to Stashaway Singapore in the next few months, you would get an idea of what we are talking about here, as I talk very cryptically. and you will see that we do things which are still in the mantra of building wealth for the long term for customers. I will say that fintech is very interesting, right? And it doesn't stand still. So I think along with the advent of digital banking and all that, it'll be interesting to see how it all coalesces together. I think each digibank will have its own robo-advisor partner equivalent or whatnot. We haven't chosen a dance partner or anything like that. Don't quiz me on that. But I think everything will just move in the direction of serving customers better, and I think that's definitely a plus, right? So definitely here to stay. Definitely want more market share. It can never be enough. Our appetite is insatiable. If you look at the whole robo-advisor landscape in 2020, the SE released some numbers on its annual report. There was only about close to 500 million in assets, and if you think about the unit trust space, which has 500 billion, obviously not all retail money, some corporate money as well, but say half of it is retail, right? Say 250, 300 billion, half a mil, 200, 300 bill, it's a long way to go, right? So yeah, definitely hope to play a small role in the big things that is to come.
All right, definitely interesting thoughts, especially on the digital banking side as well. Yeah, that's definitely interesting space to watch at. With that, that's actually the end of the questions.